Do you hear that? That silence? That is the sound of a market holding its breath. To the amateur, this looks boring. They see a flat line and think the excitement is over. But to the professional, this silence is deafening. This isn't boredom. This is maximum tension. This is two massive armies staring each other down, waiting for the signal. Because right now, sitting at exactly $65.77, a multi-billion-dollar algorithm switch is about to be triggered. And when that switch flips, this silence won't just break. It will explode. We are approaching the most critical moment in the financial week, the weekly close. To understand why this moment is historic, you have to look at the bloodbath we just survived. The banks spent the last 5 days trying to break this market. They threw everything they had at us. They orchestrated margin hikes in the middle of the night. They dumped thousands of naked short contracts during the thinnest trading hours. Their objective was clear: smash the price back down to $60 and demoralize the retail holder, and they failed. Look at the price. $65.77. We are holding the high ground. The fact that silver is refusing to drop after that level of institutional assault is the single most bullish signal I have seen in 40 years. They fired their biggest cannon, and the wall didn't even crack. But why do I keep obsessing over Friday? Why does it matter if we close at $65 or $64? It is just a number, right? Wrong. In the world of institutional finance, the daily price is just noise. Hedge funds don't care about what happens on a Tuesday morning. They care about the verdict. And the weekly close is the verdict. It tells us who won the war. For the last 3 years, every time silver tried to break out, the banks used Friday afternoon to execute a smash. They would dump massive amounts of paper right before the closing bell to ensure the weekly candle looked ugly. They wanted to leave a long wick on top of the candle, a scar that signals weakness to technical traders. But look at today. There is no scar. We are trading at the highs. If we close here, the weekly candle will be a massive solid green bar. In technical analysis, we call this a marubozu. It is a Japanese term for a candle with no wick, no shadow. It means buyers were in total control from the opening bell to the closing second. It means the sellers didn't just lose, they were annihilated. A shooting star candle signals rejection. A marubozu signals domination. And this domination is about to send a signal to every computer on Wall Street. Now, we need to talk about something cold, something unfeeling, something purely mathematical. The robots. You might think you are trading against other humans. You aren't. In modern finance, 80% of the volume is algorithmic. It is managed by black box systems known as CTAs, commodity trading advisors. These systems control hundreds of billions of dollars, and they don't care about inflation, they don't care about solar panels, and they certainly don't care about your feelings. They care about logic gates. For the last month, these robots have been sitting on their hands. Why? Because their code is binary. As long as silver was below $65, their logic gate was red. It meant wait. It meant neutral. But if that bell rings in a few hours and the price is above $65, a switch flips inside the server farms. The logic gate turns green. This is the algorithm switch. It changes the command from wait to execute, and this is where the magic happens. These robots don't buy immediately, they calculate. Over the weekend, while you are sleeping, these systems will rebalance their risk models. They will see the breakout, they will see the marubozu candle, and they will queue up market on open buy orders for Monday morning. This creates a domino effect. The first robot buys, pushing the price up. That triggers the next robot, which has a slightly higher entry point, then the next. It becomes a feedback loop of buying that has nothing to do with news and everything to do with code. This is why Mondays following a breakout are often so explosive. It is the sound of blind capital flooding into the market. So when you look at this chart and see the price going sideways, do not be bored. This pattern is called a bull flag. Picture a flagpole going straight up. That was our rally. Now, picture a flag waving in the wind. That is this flat consolidation. Novices hate consolidation. They want the line to go up forever, but professionals love it. This flat line is called absorption. Think of it like holding a beach ball underwater. The banks are pushing down with all their weight, trying to submerge the price, but the pressure of the water, the buyers, is pushing back up with equal force. The price isn't moving, but the energy is building. The spring is being loaded. And the moment the bank's arms get tired, the moment they let go, that beach ball doesn't just float up. It rockets out of the water. This silence you see, it's the machine recharging. And come Monday, it's going to release all that energy at once. Now I need you to unlearn everything you have been taught about risk. The textbooks tell you that cash is king. They tell you that holding a volatile asset over the weekend is dangerous. They say you should sell on Friday to sleep well on Saturday. In a normal market, they are right. But in a currency crisis, which is what this is, cash is trash. Think about the next 48 hours. The markets are locked. You cannot buy. You cannot sell. If a geopolitical bomb drops on Saturday, if a major mine announces a strike on Sunday, or if the dollar index cracks overnight, you are helpless. You are stuck holding paper money that is actively losing value while you sleep. And here is the nightmare scenario. You sell today at $65,077 to play it safe. Sunday night comes, the Asian markets open. And because of the pressure we just saw, silver doesn't open at $65. It gaps up. It opens at $67. You just lost your position. You can't get back in. The train left the station while you were holding a ticket for a ride that doesn't exist anymore. This weekend, the risk isn't holding silver. The risk is not holding it. And I'm not the only one seeing this. Look at the media. For 5 years, Bloomberg and CNBC called us crazy. They called silver a pet rock. They mocked us. But look at the headlines this week. Silver outperforms gold. Solar demand squeezes supply. Is silver the new lithium? Do you see the pivot? They stopped laughing. Now they are validating. And this is critical because the media controls the herd. The dumb money is waking up. They are late to the party, as always, but they bring the most liquidity. We are moving from the smart money phase to the mania phase. And the banks? They made a fatal miscalculation. They banked on you selling. They thought if they let the price hit $65, the retail sheep would take their quick profits and run. But the sheep didn't run. The sheep became wolves. We didn't sell at $65. We aren't looking for an exit. We are looking for an entrance. The psychology of the market has fundamentally shifted from fear of losing to fear of missing out. And when the public refuses to sell, the banks run out of ammo. We have the psychology. Now, let's look at the map. And when I say map, I don't mean the 5-minute chart. Zoom out. I want you to look at the 45-year monthly chart. What you are looking at is the grand cup and handle. It started in 1980 at the $50 peak. It bottomed out for 20 years. It peaked again in 2011 at $50. That formed the massive cup. For the last 13 years, we have been grinding sideways, shaking out the weak hands. That was the handle. And today, we just broke the rim. In technical analysis, a pattern that takes 45 years to build doesn't resolve with a $2 move. It resolves with a measured move. If you take the depth of the cup and add it to the breakout point, the mathematical target is not $70. It is $96 an ounce. That isn't hype. That is geometry. We are barely in the first inning of this game, but markets don't move in straight lines. Before we get to $96, we have a date with destiny at $72. Why $72? Because of the golden ratio. If you draw the Fibonacci extension from the recent lows, the 1.618 level sits exactly at $72. The robots we talked about earlier, they are programmed to take partial profits there. It is a magnet. Between $65 and $72, there is a vacuum. There is no price memory. That means we could teleport through this zone faster than you think. Now, I need to warn you about one trap. Next week, you will hear people screaming that silver is overbought. They will point to the RSI, Relative Strength Index, and say it's over 70. They will tell you to sell. Do not listen to them. In a sideways market, overbought is a sell signal, but in a supercycle breakout, overbought is a velocity signal. Look at Bitcoin in 2017. Look at Nvidia in 2024. They hit overbought and then they doubled in price. Why? Because the buying pressure was so intense, it pinned the needle to the max. If you sell your position just because an indicator says overbought, you are bringing a knife to a gunfight. You are betting against a freight train because the speedometer says it's going fast. Yes, it is going fast. That is the point. So the bulls have won the week. The algo switch is flipped. The map points to $96. What do you do right now? I'm going to give you the advice of the greatest trader who ever lived, Jesse Livermore. He made millions, and he said this: "It was never my thinking that made the big money for me. It was always my sitting." Sitting? It sounds easy. It is the hardest job in the world. Your brain wants to tinker. It wants to lock in the win. The news this weekend will try to scare you out of your position. They will manufacture doubt. Your strategy for the next 48 hours is simple. Do nothing. Do not touch your portfolio. Do not prune a flowering tree. You are holding the most undervalued asset in financial history at the precise moment it is being repriced by a desperate world. For years, silver investors lived on hope. We hoped the manipulation would end. We hoped the industrial demand was real. Today, hope died, and it was replaced by certainty. We don't have to hope anymore. We saw the banks fail. We saw the wall crumble. The deficit is real. The breakout is real. So turn off your phone. Go outside. Spend time with your family. Do not let the weekend noise shake you. Because when that bell rings on Monday morning, we aren't just opening a market. We are opening a new era. If you are holding the line with us, smash that subscribe button. The war continues Monday.